Before we start, just understand this is not a signal service. Everything you see here is for educational purposes only. Trading involves risk, and the goal here is not to follow trades, it's to learn the process behind them.
Good morning, and welcome to I'm the Trader Capital live trading floor. It is Wednesday, June 10th. First and foremost, all glory to the Most High God. Let's bow our heads for a quick prayer. Our Heavenly Father, we thank you for your grace and your mercy. We thank you for another opportunity to try again to learn and grow in these markets. Father, we ask that your will be done today as it is in heaven. Father, I ask that you give us the heart of a giver and make us a lover of our neighbor. Please let me not lead anyone that listens to me astray, but use me as a vessel to bring your children back onto you. In Jesus' mighty name we pray. Amen. Can the church say amen? Amen. Let's begin. Before we jump in, I just want to say this. There was a time I used to sit down at the charts with no real plan, jumping between strategies, losing, blowing accounts, second guessing every entry, and honestly just hoping that the trade would work. And that's where most traders are today, not because they're not capable, but because they don't have a structured process. The biggest pitfalls that causes traders to fail is that they have no knowledge on money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. 90% of traders fail, all 90% are plagued with one or more of these pitfalls. Today, I'm going to show you the 3 pillars that every trader must have in their trading to survive and thrive in the financial markets, so you can join the 10% who succeed and fast track your way to the top 1% of the wealthiest people on this planet. It's called the 10% to 1% club. Let's go. Woo! But before we dive deep into the 3 core pillars, when you step into this arena on this battle, first have crucial realization. Realization number 1, trading is war. This is not a get rich quick scheme. This is the hardest thing that you'll ever do in your life. Realization number 2, all traders are money managers. As a trader, your ability to manage money is vital to your survival in this industry and in life as we know it. Most traders think that success in the markets comes from finding the perfect strategy or catching the biggest moves. But the reality is, trading success is built on 3 core pillars. First is money and mindset. This is the foundation of success. Then is risk management. This is the holy grail of trading. This is what will keep you in the game long after everybody else has quit. And lastly, we have trading edge. This is where all traders start. I know this because this is where I started. That's why in today's session, we're going to hone in on your trading edge. Now, everything that we do here is built around one thing, and that is confidence in your trading edge. And at I'm the Trader Capital, our confidence comes from 3 things. First, it comes from understanding how the market actually operates. Not what social media says, but how money truly moves. Second is having one trader model. One model with IPDA signatures that we trust and execute on a consistent basis. Third is having a plan and a process, because without a plan and a process, you're just reacting to price and you're winging it each and every time. And this right here, this session, this is where we focus on the 3rd piece, the process. So many people lose confidence in trading and in life because they simply don't have a plan. There's no process they're following. There's no procedures and protocols that they're abiding by. They literally are just winging it. And they wonder why they can't get consistent. They wonder why there's ups and downs in their equity curves. They literally can't figure it out. The uncertainty of not knowing exactly what you're doing, how you're doing it, why and when you're doing it in the market will cause you to fail in trading. Confidence and certainty are key if you want to be successful in trading, and it's your responsibility as the trader, as the analyst, as the fund manager. It's your responsibility to attain that confidence, not only in your model, but also in your processes. So what I want to do right now real quickly is I want to share with you the process that we teach all our analysts at I'm the Trader Capital, and then we'll see that process live in action. This is the 3-step trading process. Step 1, condition. This is where we determine our bias. Before we even think about entering a trade, we need to know the market program. Are we in a buy program or sell program? This is where the market shows its hand. Then we have step 2, stage. This is what sets up your trade and what does your trade look like. There are 2 types of trades, retracement setups and continuation setup. Then we have step 3, execution. This is how you're going to enter, manage, and close the trade. At Am the Trader Capital, we have 4 entry criteria before executing. I'm not here to force trades. I'm here to execute my plan step by step in real time. All right, let's get into the live trading flow. Now, as you're watching, don't just look for entries. Pay attention to the process behind the entries, because this is what will get you into the 10% of traders who succeed. And if you want to go further to the 1%, well, that's where we break down all 3 pillars inside of the program. I used to think that winning trades built confidence, but it's not the wins. It's knowing exactly what you're doing, when you're doing it, how you're doing it, and why you're doing it before, during, and after each trade. And that is what we're building here. Let's begin with our daily trading processes. Weekly target going into this week, all right, is 3% as always. Mental check-in, feeling generally okay, all right. Excited to see what price action has in store for us today. Excited to continue to grow, all right, get 1% better in these markets. Nothing of note really to mention. There's always something going on, but when I'm here, 100% attention is focused here, okay. Acknowledge risk. I accept and understand that trading comes with risk. What? I said that's so wrong. I accept any risk that comes with trading today. I understand that trading comes with real risk and that losing is part of the battle. Whew. News. All right, news. Always start with the economic calendar, all right? If there's no high to medium impact news, then we don't take a trade, all right? As you can see, Monday over here, there was no high to medium impact news. You don't see a red, you don't see a green here. It was a no trading day for us, all right? So we didn't show up. I took Monday off, all right? Anyway, Wednesday, June 10th, all right, we had CPI come out at 8:30, and we have high impact news coming out at 10:30, and then medium impact news at 2 p.m. So we have news today, okay, making it an optimal day to take a trade. All right, risk going into today, we're at 0.05 of account size, and we have a max of 0.75 per account per day. Weekly program was established as a buy program, but obviously yesterday we tanked like a mother trucker. All right, and we have a sell program going into today. But let's go ahead and review price action overnight to confirm what our weekly program is saying anyway. So before we even look at the charts, right? We look at the economic calendar. It tells us when we're going to take a trade, okay? If you see a red or a green, all right, it means it's a good day to take a trade, right? If you see just one, that's fine too. You have to see at least a red or a green. On Monday, there is no red or green here, so it wasn't an optimal trading day for us, right? So we don't take a trade on those days. Today is dedicated to my little broski in a building. Anyway, let's carry on. Yep, as you can see here, all right, we took Monday's range low. First, we took the buy, which confirmed our weekly program as a buy program, and then we came down and took the sell side of Monday's range, all right, confirming our weekly program as a sell program. Okay, so going into this week, we're in a sell program for the week. Until we come back and take Tuesday's high, okay, we're maintaining the bias as a bearish bias for the week. Let's adjust our higher time frame ranges. I think 20 days now, this low here. Previous week stays. Let's get previous day. Big range from yesterday, boy. What? So if you're using previous day's range to determine your condition, which is step 1, all right, it hasn't been established yet, all right, so it was a big range yesterday, big range day yesterday, and we're just about in a discount portion of it, so you'll still be waiting to establish a condition if you were using previous day's range to establish your step 1 condition. We have a 4-hour inefficiency up here. I'm paying attention to that. It's getting a bit busy on the higher time frame here for me anyway. Let's leave it alone. We're gonna do what we need to do here, and then we'll go ahead and review yesterday. I know AM session really didn't offer us any setups at all that I would risk money behind. Okay, but lunch session and PM session was very, very, very nice. Took about 3 trades there. I think I took 4 trades yesterday. One I cut short because it was a 30 time. It was a 30 trade, and then the 50 macro gave me a setup, so I just cut that one. I was like, yeah, I want to be in a macro trade if anything. Cut it for a small loss. But anyway, step 1, all right, condition, determine bias. All right, before we take any trade, all right, we need to know what program the market is in. And for me personally here, I use current day, all right, from 12 a.m. to current price action, all right, to 9:15. Note the lowest low within that time frame, 12 a.m. to 9:15. I note the lowest low. To highest high. And that will give me my daily range for the day, which will determine my daily bias. Stretch it out for 445 is good. And I will just wait for one side of it to get taken, all right, for price to trade to and through one side of it, and that will determine our condition going into this morning. Above our dealing range, okay, we have Asia session buy side. Way above there. We don't need nothing up there right now. Below dealing range, we have previous day's low, which is also 20-day low. Okay, so that's our liquidity. Depending on which sides get taken, all right, will determine the draw on liquidity. Inside our range, we do have a few key levels. We have previous week's low inside of the range. We have a previous daily low, one of the 3 days. What day is that? That is rough. Is that Friday? Oh no, that's, I hate this Sunday. Yeah, I'll leave it alone. I'll leave you alone. Just like that, we're ready for 9:30 open. It's Risk Management Wednesday, Holy Grail of Trading. Risk management is what will keep you in a game, all right, long after everybody else has quit. This is what builds longevity in trading. All right, we're kicking off 9:30 open. All right, open, decent size open range gap. Okay, so it's an optimal trading day. So news with the open range gap determines whether we trade or not, right? It is above price. Okay, so we gap down, so we have a discount gap down. What are you shooting off to, mate? real quick. Now, the only reason, right, I would not wait for dealing range, one side of dealing range to get taken is if we get a setup formed around previous week's low, because that in itself is also a range, right? It's previous week's range. So if we get a setup that forms around previous week's low, I would be interested in it without needing a condition already established, okay? Because we already have a weekly condition established, right? So we can base that setup of that. Sell program. Weekly bias is a sell program. See what we've done? Let me set my alerts. So the main man himself, Michael J. Huddiston, said this about risk management, right? This is more important than my entry and my exit signals. This is the absolute key and cornerstone to long-term success in trading. And he was talking about risk management, okay? The holy grail of trading, all right? The holy grail. It doesn't matter the model. It doesn't matter the strategy. It doesn't matter what the candlesticks are doing, what the market condition is, all right? If you manage risk, right? If you have risk management in your trading, right, and it's obviously tipped into your favor, right, you're going to be successful. You're going to have a long-term career here, which is the goal, right? We're not here to just trade for a few weeks and be done, right? We want a career out of this. And trade risk management is what will keep you in the game, okay? So it's very, very important, right? We trade to and through previous week's low. We can either get a continuation set up here or we can get a retracement set up. Two types of trades. Step 2, condition stage, sorry. This is the high. I am interested here. Give me 1 second. This account can take a 30 trade, all right? That's why I was making sure I was on the right account. If we take sell side here, all right, it would confirm a continuation sell, But for now, we have a V-shaped retracement setup. 9. I know that was all happening a bit quick for me to talk it through. Was happening all a bit too fast. But anyway, using previous week's low, all right, we came to and through it, all right, and we displaced back above, market structure shift back above it, all right, confirming a retracement setup. All right, if we come and we're taking out this trade, all right, it will confirm a continuation sell, and I'll be interested in selling. Right now, the setup is going against the weekly. We haven't established a daily session yet. A daily session, a session bias yet. That it makes no sense whatsoever. Right now, I'm just paying attention to the characteristics of price action right now. To if it's letting me know that I'm on side, I want to see you respect this inefficiency here. But we're talking risk management today. The second most important pillar in your trading. Okay, the second most important pillar in your trading. Because it's obviously a weekly key level, right? It's very prominent, or it's a higher time frame level. So I do anticipate some sort of movement from that level, okay? A 175. Thank you very much. First trade of the morning, success. It was based on the 15 second has been auditioning with me for a couple weeks now, okay? It finally got the role of a main character, and we're taking open range. We're taking dealing range buy side here. Price is trading to and through it. So we're establishing a condition here as a buy program, okay, which is going against our weekly program. It's not important to know what the weekly is doing, but just it's also good to be aware so we have the bigger picture of price, right, from the higher time frame down to the lower time frame. But as day traders, as short-term traders, it's not really imperative that we know what the weekly program is. All right, I just like to know because I like to have a bigger picture, all right, of what price is doing. Anyway, let's see the outcome of that trade. Thank you very much. 223. On to the next. Now we'll wait to a macro time frame, okay, because that was the only account that can take a 30 trade, okay. Post 30, 930. Quickly. We're talking risk management here. We're talking risk management today. The holy grail of trading. All right, so when you step into this arena, this battlefield of the financial markets, trading, speculating, investing, whatever you're doing, however your style of trading is, all right, your style of investing, when you step into the financial markets, right, you need to understand that there's only two things promised to us here on this battlefield, all right? There's only two things promised to us, right? One is every trader will encounter a losing trade. And the second thing is that every trader will experience a series of losing trades, right? So, hold on, actually, bear with me 1 second. Come on, man, get it together, man. Get it together. Get it together. Oh. It's still a 30, so I wouldn't be interested here if a setup formed. even if it's clean. Please bear with me. My thing is, I don't know how to fix it, but like my encode and overload, something is slow here that's making the stream very slow. I may not know how to fix it. I'm gonna look into it after this session here, because I can't have this be like, consider turning down video settings or using the faster encoding. But how do I do that? How do I do that, mate? Where do I go to do that? Let me unsync this. Only showing 15 seconds. This would be a V-shaped continuation. I mean, retracement. I'm watching it though. I'm watching it. I'm watching this right here as a V-shaped retracement setup of dealing range buy side. But I already got my setup here for the 30, so nothing for me to do. I'm just watching, collecting the data. Oh, I didn't get a snapshot, did I? Hold on, bear with me. This is kind of what I've been doing to journal. It's no bueno, but it's something, I guess. It's something. See what we've done. We take buy side here, all right? That would confirm a continuation setup for me. Not one that I would be engaging in right now, because we're still within a 30 time frame, and I already got my winning trade on the 30 account, so I have to wait for a macro. It's about having limits, all right? Setting procedures and protocols for yourself and being disciplined enough to follow those, okay? Like we're talking about risk management today, okay? This is the only part of the game that you control, right? Risk management is your only shield, right? Your only edge on this battlefield, the only thing that you have control over, right? You cannot control the market, but you can control how much you risk on each trade. All right, this is confirming a continuation buy. Not yet, actually. We haven't taken a short-term high here. Oh, now we've taken it. Okay, now we've taken it. So I'm looking for a buy side. Yep. That would be an, I think it would have come in, yeah, it would have tagged, I'm not sure if it would have tagged, this candle would have tagged us in there. Not 100% sure, can't assume, but above price, all right, we're targeting Asia session buy side right now as a draw on liquidity. We're about to completely fill in open range gap. Nee, you got any questions? Are you paying attention, my guy? This trade, we would have been at 1.5 here. Seeing what else it offers us. This would have been a big, huge bus, all right? What way is long? What way are you talking about, me? When I said wait. All right, so you definitely we would be getting tagged in this trade here right now. So I'm watching it, see what it does. Target wise, It's a big one. It's a big one. It's a big range here. It's a big fat range here. It's a big fat range here. As I was saying, when you step into this arena, right, you're competing against the central banks, institution, and professional traders, entities that are not in the business of losing money, right? Central banks didn't create this casino so we can make money, right? They created it so they can control the money and they can have access to the money. It's their commodity. It's their commodity anyway, right? That's how they're controlling, okay? In trade and risk management is your edge, is your shield, your only defense against the central banks, the only aspect of the game that you have control over, okay? That's what makes it the holy grail, because you have control over it, all right? So once you understand the only two things promised to us, right? How should you be looking at risk, right? How should you be anticipating the losses that are coming, right? Because that's the only thing promised to us in this game, right? You should control the amount of risk in your account. If you don't do this, no one is doing it for you, and you certainly will lose in this game, all right? So how should you be looking at risk, and how can you manage risk to survive and have longevity in trading, right? Once you understand that losses are the only thing promised to you in this game, okay? Hasn't given us bread and butter yet, okay? Hasn't given us bread and butter yet. Before we dive into how you should be looking at risk, right? First, we need to know the common mistakes and what to avoid when it comes to risk management. Actually, let me show this PowerPoint instead of what is being shown right now, because all right, this setup here would have given us bread and butter setup. Our initial setup that we were in would have given us -2 here on the fib extension. If you took that, there was nothing wrong with that setup there, right? It was a clean continuation setup, all right? For me personally, I already took a setup during the 30, okay? So that wasn't my setup particularly, all right? The account for the 30 already got his winning trade for the day, so it's done. It's done for. But this was a sexy continuation buy setup here. We traded up to and through external liquidity. We dropped back down into an inefficiency, all right? Remember, my continuation, we did take sell side on the 15 seconds anyway. Continuation model is the only model that encapsulates both liquidity and or inefficiency, okay? It can be one or the other. For retracement, it's just purely liquidity for now, until I collect data on the other side, because I've been seeing a few here on the other side using both, but nothing that I would confidently. All right, that's all. It's all about confidence here. If you don't have enough confidence in something, there's no need to put risk behind it, right? If I'm not confident in something that I'm doing, I'm not going to put risk behind it. It's all about building confidence, and we talked about that yesterday, right? How you can build confidence in your trading edge. Anyway, let me get this thing so it can be visual. This is old, but it is what it is. I'm just gonna have to do what I do until I take the time to fix what I need to fix here and do what I need to do. Bear with me. Don't tell me it's a long wait, my guy. Okay, it's 9:50. 950 macros popping off. Daily condition has been established as a buy program. We're looking to be a buyer of this market. It doesn't mean that we can't sell, right? We just understand that it will be a retracement sell and we'll be going against our daily condition. But it would be in line with the weekly program, okay? That's why it's important to be aware of what the week is doing. Even though it's going against the daily session condition, it will be in line with our weekly, a higher time frame condition. Not that it's important, but it just helps, right, to have a bigger picture of what's going on in price. We're trading back down into an inefficiency here, below external liquidity. Price just missed us at Asia session buy side, created relative equal highs here. Suspect, okay? Suspect, I'm suspect of that. Market structure shift here. I'll be interested in a continuation, all right, to take that Asia session buy side. Only if it gives it. If it doesn't, it doesn't, right? And if we take a loss, right, as we just heard, read, right? That's the only two things promised to us: a series of losses and a loss, right? That's the only thing promised to us, that we're going to take a loss. That's the only guarantee here. All right, we're above external liquidity. We took a short-term low here. Market structure shift back below it. 15 seconds. I don't trust this high here, but I'm watching it regardless as a retracement sell. Oh. This would have been a valid entry here. Wasn't quick enough. I do like it. Now I'll have to, I'm waiting for this one. 3, yes, 3. Gotta be quicker than that. Yeah, this would have been taken out anyway, so yeah. Good thing not trusting that. I'm watching this here though. I'm watching this. Teeny. Teeny. Teeny, 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 teeny. Teeny, 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 tiny, teeny, tiny, Tim. Watching this tiny retracement set up here. But we don't judge the ranges, right, by the sizes that they come. We don't judge them. Oh, I do like this now though. Ah, I like that. I like this. I like this. I'm too late. I'm too late. I'm too late. It's okay. I kind of want this one still, you know. For me, right, that's the one I feel confident in. If it doesn't give me that one, that's okay. This is a starter. If you give me that, I will have more confidence. Anyway, I was doing something here. I was trying to flip this thing. Da 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 da. baby. All right. Is it gonna give it to me? It's gonna give it to me. Bear with me. I'll be interested here in a continuation buy setup. Hasn't given it to me yet. But finger on the trigger, finger on the trigger, finger on the trigger. There it is. Thank you very much. -1 is right for me anyways, right? 175. Well, it'll be below, will be 69, 75, 69. There was an earlier entry down in here, okay, that I missed, all right? But I was more confident gaining this one, actually, so it is what it is. 69.75, and if we take a loss, we understand that that's the only thing promised to us here, right? 69.75 right there. Second trade of the morning. See how it goes. I like the respect of this inefficiency here. I'm watching to see what the initial setup would have given us here on this entry. -2 is in line with Asia session buy side. Would have given us bread and butter, but that's not what we're watching, so let's stick to what we're watching, I guess, right? Oh, I didn't do anything with the picture that I was... Bear with me, please. There's a lot going on right now. There is a lot going on right now. Morning's usually not this busy. God damn. Bear with me, please. Making sure the mic is on because that's a new level of fear unlocked for me here. Let me know if you're watching the charts. Let me know how it's going, because me can't see. Well, there's it. Yep, still copied. Thank God. We take sell side here, meaning we get taken out of this trade. It will confirm a retracement sell, which I would be interested in. Obviously, we'll start with this one here, but I'm waiting till I get taken out of my trade. Right here, right here, right here. Oh, this is going slow. Everything is slow. Oh my God, I don't know what to do. Everything is lagging. This is no bueno, man. No bueno. 10 o'clock. Opening range. Oh my God, there's too much going on and this thing is going too slow. Alright, confirming a retracement set up on the 15 seconds, meaning we're about to get smashed out of this trade. Once it takes me out, I will be interested in a sell. but I'm still in there. Open range has been confirmed. Market structure shift above, back above here would be good for my current trade. Let me go ahead and do open range. Alright, we're about to get smashed out. Alright, confirming a continuation sell. We're back in there. We're back in there like a swimwear. Hold on. Bear with me, please. There's a lot happening right now. I probably just need to chill and let the market calm itself, or let me calm myself down, get what I need to do done. what is this, 350? We're looking at 250 or 450. Leave it there for now. Let's look at the outcome of that trade before I miss it. Oh damn, I missed it already, didn't I? Because I already go in the trade. This one is down 148, so 148, it was about 200 on that one. Whoa. You know what, let me carry on with what I'm doing here. Again, open range, dealing range, because we're about to get smashed out of this one as well. This account will be done for the day. Dealing range. $430 to right here. All right, we got taken out of that. Losses are the only thing promised to us here. I see it right here though. That continuation buy. That account is down 3340. All right, on to the next. No love lost here. Keep it pushing, keep it moving, keep it flowing. Do like this though in 1 minute. Bear with your goat, bear with you, bear with me, bear with me. Bear with me, bear with me. Back in the continuation buy setup here. Okay, let's see how it goes. So my hands is in the model, the risk management, and the market's hand. 850, yeah, right there. Now back to what I was doing. Golly, I gotta get a snapshot of them losses there. Where you going, my guy? Huh? Where you got to go? Where you gonna go? Where you going on today? Tell me where you're going. We're waiting. We the people are waiting. even see that, can you? Going where? Where you going? Training? Okay, let me shut up here. Got relative equal highs up here, okay? I'm suspect. I'm suspect of that. Doesn't have to take it today though, you know? But I'm very suspect of it. see the size of this range here. 969 at 100. 9 less than 100. Oh, that account go unlucky, man. Is go unlucky in it. Taking open range buy side. All right, confirming session bias as a buy program in line with our daily program, but going against our weekly, both of these time frames or these conditions. Market structure shift back below the displacement would go against our setup right now. Trying to see the size of the range here. 6. Let me do some math. 29. 29. 9.25 minus. Alright, so if we do get a V shape, market structure shift back below the external liquidity here, will reduce probability of my trade, but so far so good right now. Minus 100. Still haven't taken Asia session buy side, all right? It's creating relatively equal high still. Now, would I consider this a V shape? Not really, but let's see how this plays out. Last line in the sand for this trade here for me. Not that I'll be doing anything because obviously there's only one contract, Larry. So there's nothing I can do. I have to wait till the fat lady sings in this trade. It will be a closure below this inefficiency. Okay, would be the last line in the sand for me. But right now, what I do want to see is price come up and cause a market structure shift here back above external. All right, that will obviously give me another continuation setup and add increased probability of my trade right now. Because right now it's slacking in probability. It's slacking. I don't need to draw that. That's fine. want to see it take the short-term high here. If it doesn't and it come and take this low here and closes below mean threshold of this inefficiency, I'm cooked. I'll be in the frying pan, cooking, getting fried up. I'm gonna go back when it calms down a little bit and kind of see what was going on in this area here with the 2 losses that I took. Contract shift soon. Where is it? I put it here somewhere, didn't I? I added it to this tab. Yeah. Not yet, but we're close to it. I'm using, it's not a low, I'm using the buy side. I'm using the open range or dealing range buy side for the continuation. We took liquidity below open range buy side, displaced, caused a market structure shift back above it. That's a continuation buy setup. So it's not just the lows. You can buy at lows and sell at lows, just depending on the characteristics around that key level. Poor account here, poor account. It was the leader, now it's probably down. Yep, it's down now. Ooh, get it together, mate. Get it together, mate. No. It was leading, and now it's on the same playing field as the. Oh, well, yeah, they're close in proximity now. $200 tearing them apart right now. This account been in drawdown for forever. But this one was leading, now it's in drawdown. Okay, all right. Don't let it come and overtake you now. Just getting unlucky in your setups, aren't you? You're getting real unlucky in your setups. I'm sorry. Nothing I can do about that, really and truly. Anyway, we're talking common mistakes and what to avoid when it comes to risk management. Nothing more I can do in this trade, so I'm just going to leave it alone, let it do its thing. If it takes me out, that's okay. It is what it is. Losses are the only thing promised to us. That's what we're talking about right now today, right? Managing risk, right? I took 2 losses on that account, right? I still am allowed one more trade on that account, but for now, I'm gonna let it breathe. Okay, if I see something clean in the PM session, maybe potentially I'll get in. All right, because I still have one more trade left in me on that account. Okay, it's just a personal choice whether I wanna risk that, right? But due to my risk parameters, right, I can still get into one more trade on that account because it hasn't hit my risk my risk tolerance for the day on that account. Okay, it's 750, right? 0.75, 750. So we still have one more trade left in us on that trade, depending on what PM session is saying. All right, it's about to smash Asia session buy side here. Market structure shift here. All right, just confirmed another continuation setup for me. So it's good for me right now in my current trade. But it was a decent size range here. So let's see if it's going to give us -1 on this setup here. Let's see. My math wasn't, if this range was bigger than 100 points, which is something I need to collect data on. On big ranges with more than 100 points of a range, all right, I'm going to start taking something off at bread and butter, or 0.5 anyway. So it's giving us bread and butter. All right, let's see if it gives us -1. It is a decent for a 15-second setup anyway. On a 1 minute time frame setup is a decent range. So let's see if -1 is in store for us here. Anyway, common mistakes and what to avoid: over leveraging, right? Over leveraging, risking too much on one single trade. All right, don't try to rush your profits, right? These are common mistakes that new traders, inexperienced traders make, right? Over leveraging, risking too much. All right, try to make, they took a loss, right? So they'll go in with a higher leverage to make back the losses that they just took, and make back more than what they wanted to make, right? That's the mindset that we all had when we came into here. I had that. I've been through all of this. These are common mistakes that I made, all right? And some of them I still make, but I don't make them as often as I used to make them. I'm watching. I don't have any procedures and protocol in place right now, because so there's nothing I can do. And I don't like that. This is why I don't like not having something in place, because when I don't have anything in place, I'm left like thinking, okay, what do I do? I don't like to be, in limbo, like not knowing what to do. I like to know what to do, so when it happens, I'm doing it, and there's no thinking, there's no emotions into this right now, right? I'm just going to let this trade be, and we'll just focus on what's going on here. If we take a loss, we take a loss. It is what it is. I'll put something in place, all right? After this week or during this week, I'll see what I can do to put something in place on those big ranges that are like more than, I'll say 100 points, more than 100 points, okay? Anyway, no stop loss and take profit. No stop losses and take profit. Trading without predefined exits, okay? Trading without predefined exits. This is what brings in fear. It encourages fear and greed, right? If you don't know where you're getting out, if you don't know where your trade is, the point where your trade is invalidated, then you're second guessing every move. You're just all over the gaff, right? You're inviting fear and greed, and fear and greed is what causes 90% of traders to fail. I have to check the mic. It's what causes 90% of traders to fail, okay? So not knowing where your stop is, all right, not knowing where your target is, okay? These are common mistakes and something that you need to avoid. You always need to have a set predefined exits, okay, and how much you're risking. You know exactly if this trade takes you out for a loss, you know exactly what is coming out of your account, okay? There's no second guessing, there's no uncertainty, all right? It's uncertainty that leads to fear and greed, all right? Revenge trading. Try to win back losses with bigger trades. Avoid chasing large profits. Once again, avoid chasing large profits. This is what we just talked about with over leveraging, right? When you take a loss, right, you want to make that loss back immediately. So you go back in with a higher leverage, all right, to make back the loss and then some, right? I've been there, I've done it so many times, right? We know the outcome of that. It leads to blown accounts, it leads to losses, and it leads to you failing in trading ultimately, okay? Focusing only on winning trades and ignoring the importance of managing losses, right? I would say 100% out of it's been the losses that I've learned and grown the most out of in my trading. Okay, when I take losses and I analyze the losses, all my losses, and I extract the information from the losses, that's how I grow and get better. So don't just focus. Don't. It's not all sunshine and rainbows here. Okay. And we're not here to just focus on the sunshine and the rainbows, right? There's going to be rainy days. Sometimes it's going to pour and it pours, right? It pours, definitely. So don't just focus on winning trades. Pay attention to your losses. Collect the data. Extract the information. What is common within every loss that you're taking? What is common? What can you take from the losses, right? What are the characteristics that price action shows you when you take a loss that, hey, potentially you could have been like, okay, I'm seeing this. This is the characteristics I'm seeing when I'm offside, when I take a loss. This always happens. So when that thing happens, you know for a fact, obviously the probability in your trade has just reduced, and obviously you can do something about it, right? You can either reduce risk or close the trade altogether. I'm really annoyed here in terms of it, not with the trade, but just because I don't know what I'm doing in this particular moment. It's really irking my nerves. But it is what it is. It is what it is. That's on me. That's on me. I need to put something in place. All right. I need to put something in place for this. So I'm not going through. I'm on the wrong account here, and oh no, I'm good. I'm good. Why is it showing me multiple trades on a different account here? This is not this account's trade. I want to see right now. What I want to see is a market structure shift back above this external liquidity. Will signal to me that my target could potentially be getting hit. Okay. Above external liquidity, we drop back below into inefficiency, taking a short-term low as well here. Okay, market structure shift back above here would confirm a continuation buy setup, which will be good for me. All right, in my current trade, it would add some oomph to price into hitting my targets here. Okay. Not adjusting position size. These are common mistakes and things that you need to avoid, right? As a new trader with 0 to 2 years of experience, right? These are things that you need to be aware of, all right? Common mistakes you need to be aware of so you can avoid them. Doesn't mean just because you're aware of them that you're not completely going to do them, right? It's a journey, it's a long process, right? You're going to make these mistakes, but as long as you're aware of them and you're not repeating it, that is the goal here, okay? Not adjusting position sizes, keeping risk constant. Yeah, that's the word. Failing to reduce risk after a loss or series of losses have been taken. Okay, remember the only thing promised to us is losses, all right, and a series of losses. We're always preparing for the next loss and the next series of losses. So it's imperative, right, that once you take a loss, whether it's one loss or two losses, reduce the risk in your account. Right now, I'm at my lowest leverage, so there's no way for me to reduce any risk in my trade. As I increase my leverage, right, obviously I'm going to be adjusting as I take losses, and as I win, I'm going to be adjusting because I'm always mentally preparing for that loss, mentally preparing for the series of losses because that's the only guarantee here, right? That's the only thing that we can look forward to. So that's the only thing that we need to be preparing for, all right? And by reducing risk when you take a loss or when you're winning, all right, you're mentally preparing yourself, your account for that loss that is coming because it is coming. Like this morning, I took a win initially at 9:30, right? Obviously, I didn't know I was going to take two consecutive losses after that. There's no warning coming saying, hey, your series of losses is about to begin. So be prepared. You have to always be on guard. All right. I took a win and then we took two losses after that, right? Obviously, if I had a higher leverage, I could have reduced the risk on my next two trades. Or after two losses, I want to reduce the risk. But there's no way possible for me to go any lower than 0.25. All right. So I'm currently trading at my lowest leverage until I start building more data, more confidence. I'll start increasing it incrementally, all right, and then reducing it as I win and lose, okay? So it's imperative to reduce your leverage after taking a loss or a series of loss, right? It can be one loss, it can be two loss, or it can be three losses, and then you reduce your risk, depending on your risk tolerance and your risk per day for your account, okay? Avoid short-term into long-term, holding, losing, and winning trades for too long, hoping that the market will turn. So if you set your targets, right, you set your stop loss, you set your target, right, but something in you saying, oh, this market is going to run, right, you feel like it's going to go more than your target is at, and you adjust it, based on your intuition of what you feel like the market is going to do, right? avoid doing those things, right? Avoid it. If you set your target, you set your stop loss, that's it, right? Be content with enough, right? If the market takes you out for that and it continues going, it's okay. Record it, put it down. Like, okay, this is where I got out, and this is where the market actually ended up finishing. Later on, as you build more confidence, you can leave a runner on to capture these. But right now, that's not our main focus. Avoid rushing large profits, all right? Chasing large profits. Avoid it at all costs if you have less than 2 years of experience, okay? Also, like when prices coming against you, all right, and you feel like, oh, it's gonna turn, and so you're adjusting your stop lower and lower and lower, and you even take off the stop, right, because you feel like price is gonna turn. It just needs room to breathe. No, we all know the outcome of those things, right? It leads to blown accounts. It leads to major losses, all right, that puts a dent in your account. Our job here is capital preservation, always, okay? Where we at? Don't assume that taking small risk defined trades will not grow your account. All right, think about compound interest. This is something that was really hard for me to grasp in the beginning. Okay, I'm like, I need to make money. All right, so I need to make money. Oh, this is confirming a continuation setup here. All right, I like it for my trade right now. I like it for my trade right now. Let's see how it plays out. All right. Yeah, so don't assume that taking small risk defined trades will not grow your account, okay? It's about taking small bites of the apple, taking small bites, and eventually that small bite is going to lead to a whole apple, okay? It's going to lead to the whole apple. We're not here to make riches in a day, all right? We're not here to make millions in a day, in 2 days. It's about taking our time, taking risk defined trades, right? That compound, that puts the probability in our favor, right? Put the numbers in our favor, that gets us to our goal, okay? So don't assume that taking small risk defined trades won't lead to you making the money that you want to make. Remember, it's about the process behind the trades, right? Regardless of how much you're making right now, right? As you build more confidence and gain more experience, right? That when you just switch, increase your leverage a little bit, right? That money that you're making right now can be as big as or as small as you want it to be, right? Don't worry about the outcome, all right? Risk always. Risking capital you cannot afford to lose. Risking capital you cannot afford to lose. This is not a casino. Don't come here to gamble, right? Don't bet your rent. Don't put your rent in a trading account and think that you can flip it in 2 weeks, all right? That's not how it works here, okay? Don't risk capital you cannot afford to use. If you come into the market with a desperation mindset, right, with the need to make money, you're not going to make money. That's what's going to make you not make money, all right? When you come into it with a desperation mindset, you're inviting fear and greed, all right? And fear and greed is a killer, all right? It's a killer, it's a major killer, it's what causes 90% of traders to fail. We don't want none of that, okay? So don't risk capital you cannot afford to lose. If you don't have the capital right now, don't worry about it. Learn the skill. There's so many. Tomorrow we're going to talk about how you can scale, all right? Your trade. Once you master the skill, how you can scale in terms of capital and funds, right? There's so many opportunity out there once you understand and master this skill that you don't need to be risking capital that you currently don't need to afford, right? Lastly, don't look for others to measure against. Trading is a solo sport. Don't compare yourself to other people and where they're at in their journey, okay? This is a big one because in the beginning, obviously I was on social media, watching traders and people that already like been in the industry for a long time and what they're doing, what they're achieving. I'm feeling, why am I not there yet, right? Comparing myself, why am I not there? Which it's no good for you, man. It's not good for you. Everybody is on their own path, is on their own journey. You don't know what they're going through, right? You don't know what they've been through to get to where they're at, right? Just focus on yourself, right? Focus on you and what you're doing, what you got going on. Don't compare yourself to other people because everybody's on their own journey. Everybody has their own different life experiences that's brought them to where they're currently at. And you comparing, you don't know behind the scenes. You only know what they show you, right? You only know what they show you. You don't know if the person that you're following right now, they obviously maybe portraying a lifestyle of that they're making it, but you don't know that they've taken like 200 losses right before they took that one win in trade. You don't know that. You can't assume and you can't measure up against other people, right? It's you versus you every day you're in the markets, right? Don't focus on any other. It's okay to trade in a group, right? In a community settings, which is what I'm trying to build here, trade in a community settings. But at the end of the day, you're the one pushing the button, you're the one making the decision. So it's you and the markets only, nobody else, okay? So don't look for others to measure against. Don't compare yourself to me, all right? Because my journey and my process is different to what you're going through, okay? So everybody's different. Me not like this at all right now. Me not like this right now. Market structure shift back below here will be no bueno for me right now. No bueno. Me not like it. Me not like it. So we're trying to avoid the market structure shift back down here. But it's not up to me, right? It's not up to me. It ain't up to me. All right, let's go back and do this math real quick. Yeah, it's hit the standard deviation here. It doesn't need to give me any more. It doesn't need to do any more than what is done already. So or potentially with these ranges I can use the body, but remember I always wanted to be consistent in what I'm doing. If I'm using bodies, right, it would have given us -1 already based on the size of the range. Okay, so let's see here. I'm gonna do the math. I'm gonna do the math, do the math, do the math. Let the numbers do the thing. Let the numbers do the thing. What are we looking at? We're looking at 29.119.25 minus 28,969.00. 150. Yeah, 150. So it's more than 100 points. More than 100 points, meaning, all right, we should do bodies. Meaning we should do bodies. All right. I doubt it's going to give it to me again. But we'll make the adjustment right now. 3, 3, 3, 5, 3, 5, 7, 5. Yeah, I doubt will give it to me. Me doubt it. Me doubt it. If it does, great. If it doesn't, that's fine too. But over 100 in terms of the range, all right, I'm going to use the bodies for my targeting. And that's what we're going to have in place, and we'll leave it at that. For now, we'll collect the database. We'll move forward with that, collect the data. If we need to adjust it, we'll adjust it. But for now, I'm going to leave it at that. Because I really don't like it. It's one thing I found out by myself. I don't like not knowing what I'm doing next. You know, I like to know what I'm doing next. If this happens, then I'm going to do that. All right. But if this happens and I have nothing in place, then I'm all over the gaff, right? This is the feelings I'm always trying to avoid in my trading. Not knowing what I'm doing next. That is what you need to avoid in your trading at all costs. All right. You obviously you're starting out, you're going to be collecting data and back testing, right? That's what forward back testing, demo trading, and forward testing is all about. You're building that procedures and protocols. You're building what you need to do, what you're going to do, and how you're going to do it. Okay. So until you get there, obviously there's always going to be stuff that happens as you continue your journey, right? That you're like, okay, this has never happened to me before, so this is something that I'll need to potentially put a procedure and protocol in place for, right? As I'm finding out right now, right? Right, I had things in place, but as I'm collecting more data and gaining more experience, there's new things that come up, and I'm like, okay, I don't have nothing in place for this right now. Let's put something in place. I don't want to see price respect this inefficiency. I don't want to see it. Right now, my my inner self is telling me, close this trade, because it's hit your target and you've missed it. So close the damn freaking trade and come back. You know, because you don't know what you're doing. You've lost yourself here in this trade. You've lost it, mate. You've lost it. Yeah, I will close it if we take this low right here. I will close it and feel no type of way, and then come back for 1050 macro. I won't even take a trade on this account, really and truly. We'll be back for PM session. I don't like this for me at all. I don't like it for me at all, mate. Me not like it. Me not like it for me. Especially on this account. I have an attachment to this account. I don't know why, but I have an attachment to this account. I shouldn't, but I do. I shouldn't, but I do. I'm attached to this account. I'm attached to it. Yeah. Because I don't like what's going on right now in this trade, I just rather be out and let it do its thing, and so I'm not worrying myself about it, right? About what it's got going on. It's done. We closed it. No type of way about it. It gives me another opportunity going into PM session. I will engage in this account, okay? And then we'll be getting that market structure shift here. I'm happy I closed it, all right, because I wasn't liking how I was feeling in the trade. Okay, sometimes you need to listen to your body and what it's telling you in these markets, right? It's especially when it comes to like risk wise, right? If you're in a trade and the risk is just too much for you, and your body's like, you're feeling some type of way, you know, your heartbeat is picking up a little bit, and you're just uncomfortable. You're not yourself, right? Close the trade, close it wherever it's at, close it, and let it do its thing. Forget it, all right? Step outside of it, and watch it from the outside and let it do its thing. Right now, I feel good. I'm happy I closed it. Feel no type of way. Even if it was to go and hit the targets right now, it's not the kind of trade I want to be in, right? So, it is what it is. Lesson learned. We're 1% better for it. We move, and we keep it pushing. See what 1050 macro has in store for us. Why is it not showing? I want to see on the 1 minute as well now. But our initial setup from 9:30, where are we at on that one? Did I keep it? Did I keep on it? -3. -3. It's been a busy morning. And I need to go back and analyze the data from this morning. It's been a very, very busy morning. We still would be in here, okay? Our stop was down here. We're still watching it. See what happens. Yeah, the stop was here because this is the setup. I'll go in now. I'll go into on this high right here. Body wise, we hit -1 right there. So ranges over 100 points. We're using bodies. For managing. use the bodies for managing the trades. Will not be looking good right now. $10.50 macro. What you got for us? What's the dealio? What's the dealio? This guy here, boy. When I get my hands on him. do is gonna be a problem. I'm gonna wrap it up here soon. We're gonna wrap it up here soon. I do like that for a retracement sell, but late. I'm gonna wrap up. I'm going to wrap it up. Protect yourself. Wrap it up. Watching this. Just watching. I missed it. It went without me. That's okay. Let's see how many contracts it would have let us in on. 2 contracts, both would be coming off a -1 right there. We'll be done. Okay, let's wrap it up. That was our macro setup right there. It's going without us. That's cool. We'll let it go. It's been an eventful morning anyway. We don't need to add any more to it. But solid setup right here. Do a trade performance review. I'm over it today. I'm over it. That just threw me off. It threw me off I'm off balance. I need to go and recuperate. Recuperate from that, because yeah. Anyway, I don't like not knowing what I'm doing and what's happening. But anyway, let's wrap it up. At least we ended on a good setup here, so we'll take it for what it is. All right, I'm not in there, but I'm still happy and pleased I was able to identify it and watch it do what it needed to do. Okay, so yeah, nothing for me to change. All right, just a few minor things we need to tweak here and there. All right, but so far what I'm looking for in the charts is it gives me multiple opportunities, and there's nothing I need to adjust. Right, I just need to tweak a few things, and all will be well. Okay, but today's been an eventful morning. All right, we took 1, 2, 3, 4 trades today. All right, 1 winner, 2 loser, and the other one we'll just count it as break even. Okay, we'll just leave it at break even. Because we didn't take a loss, nor did we take a win, so we just count it as break even. And what I did well today is that I showed up. All right, I got 1% better, gained experience, learned lessons that I'll take into my next trading session, next trading day for 100%. I now have a procedure and protocol in place that if my range, right, that I'm framing my entry and exits on my risk on is over 100 points, all right, then we'll be using the bodies to frame to manage the trade, right, instead of the wicks. Remember, I do wick to wick, but if that range, wick to wick range, is over 100 points, we're going to be doing the bodies. Okay, if you had done that today, okay, we would have got a -1. Okay, not that we're looking into the past, but you know, things that we can do to learn and improve. I mean, I guess I should have saved it for the last point. Anyway, what I fought short today is my wake up time. I did get my morning routine in, all right, but my wake up time, I would have loved to wake up a little bit earlier than I did today, but it is what it is. Chart wise, I showed up, followed my procedure, my protocols, and didn't deviate from it. All right, managed the risk to the best of my opportunities. stayed within my risk parameters. Okay, so yeah, very sexy trade for us to end on right here. All right, love that. Just made up for my previous mishap that I feel like I did, but it's all good. Yeah, chart wise, I showed up, followed my precision protocols, and didn't deviate from it, so I don't think I fell short anyway. So today would just be my wake up time. Okay, how I can improve for next trading session that we just talked about. Okay, if the ranges are over 100 points, we're going to use the bodies. All right, in terms of managing and putting out exits, managing the trade. Keep showing up, right? Keep seeking excellence in everything that I do. Don't let short-term adversity, losses, series of losses deter me, distract me from what I got going on. By showing up today, all right, and collecting the data today, all right, I'm 1% better than I was yesterday, okay? So that's all it's all about for me. Just showing up, right? Amen. Seeking to be 1% better, and that's all I can do. Keep analyzing the data. Keep analyzing the data. This morning, really, I'm gonna go back into this morning and analyze the data for this morning. Okay, really dig deep into what was happening in this week, especially during the 950 macro time frame, especially what was going on in the 950 macro. Really dig deeper into that time and see how, if I could have done something different, right? If those two losses could have been avoided. They were following the model precision protocols, but obviously there's always things that characteristic that I can see that will obviously allow me to eliminate or mitigate some losses, all right? Not all losses, all right? I'm always going to take a loss. I get that. I understand that. But I'm going to go back into that time and dig deeper into it and see what I could have potentially done differently this morning, okay? Because sometimes when you're in the weeds of it, it's hard to see what you could have done differently. But once you step outside, all right, and you're looking at it 2020 hindsight, all right, it's clear, right? You start to see certain things. That's why it's very important to analyze the data that you're collecting back. We're not just collecting the data to collect the data and have them piling up. It's for us to then, after we collected that data, to dig into that data and analyze it, extract the information that we need to extract, see the common similarities within the trades that we're taking, right? And the differences within the trade and how does it impact the trade, right? But yeah, that's what how it can improve and for next trading day, next trading session. Keep analyzing the data. Keep taking small steps, right, in the right direction. Eventually, we'll get to our destination. You're not defined by your current situation and where you're at right now in life, okay? Just eyes on the target, baby girl. Keep going. You're doing great. I'm proud of you. Don't let up, okay? Don't let up. You know what you're doing. You know where you're going. Just focus on that and that only, right? That's it. That's all we can do. Yeah. Other than that, solid morning, CPI morning for us here today. Solid morning. Taking losses, taking wins, breaking even, but at the end of the day, still enjoying it. Enjoying the process, enjoying the journey, getting 1% better. I'm happy that we ended on this setup here though. Made up for myself a little bit, but let's wrap this up. Catch you guys as always 9:15 tomorrow. Let's wrap this bitch up. Solid morning. We'll see what lunch session and PM session is. I'm gonna give myself a break lunch session because I usually recently I've been taking trades in the lunch session, but this lunch session I'm gonna just sit back and relax, and we'll be back for PM session to see what that has in store for us, and only looking for clean setups, nothing iffy. If I feel iffy about it, I'm not engaging, okay? But anyway, let's wrap it up. Before we wrap up, I want to leave you with this. There was a time that I would finish a trading session and still, even on I didn't really know why it worked. And I'm to for the difference and having a real edge. And here's the truth. Most traders only focus on entries, but consistency comes from the system behind the entry. So if you've been watching and thinking this makes sense, but I don't have the full system yet, that's exactly why I created the 10% to 1% club. That's where we go deeper into all three pillars, the full model, the risk management system, the money and mindset principles needed to join the 1% club, and the exact process to follow daily. If you're serious about becoming consistent, that is your next step. I used to think the goal was to win more trades, but the real goal is to become the type of trader who can perform no matter the outcome. Because once you have that, the results will follow. That's all for today, folks. Thank you for tuning in. I'll see you in the next AM session, kicking off at 9:15 a.m. Kickoff once again at 9:15 a.m. To be on time is to be late, okay? So make sure you show up early. As always, I'm the trader here, signing out. Good luck, good trading, happy bloody hunting. Remember, you only fail when you quit.